This is the Share Data Futures Energy Daily Dashboard Options Slide video. This particular section of the dashboard provides option-related data for the WTI crude oil contract. This can be accessed via the Options button in the top right. The slide itself provides an expiry calendar. The market data presented as a 4-month option curve. Each individual month can be selected, or any combination of the months can be selected per the user's desire. There's also the option type, so the data can be isolated, calls only, puts only, and also a slider which can allow you to zoom into specific vertical areas of price in the option data, as well as zoom it out to include all traded options, or all options which possess open interest at that particular time. The graph here in the middle provides the option open interest by strike and expiry. So the strike price is in a vertical display. The monthly expirations color-coded, which can also be selected individually. Here on the far right, we see the same data, the option open interest, but this time by strike and option type only. So this is reflecting call and put interest at each individual strike. This allows you to quickly see where the bulk of call interest resides versus put interest. So within the trading range of 65 to 50 at the present time, we see the larger concentrations of call interest at the 65 and 60 strike, and conversely the larger open interest of put activity resides at the 55 and 50 strike. And finally, bottom left, we see a linear display of the total open interest summary for each month, April, May, June, July in this particular case, which allows you to quickly see which months contain the bulk of the volume, the bulk of the open interest, and what the split within those months is between the calls and the puts. The significance of this data is to provide an additional insight in a roadmap of analyzing the price activity. These open interest levels that are high, these strikes that possess high open interest, often function as support or resistance. When they fail as support or resistance, that is equally significant market information. So, for example, in the event of a rally to the 60 level, as we saw recently, the large call open interest here meant that dealers who sold these calls, who provided liquidity, had exposure in the event that the 60 price failed as a resistance. And when these levels fail, for example, as resistance, the dealers are forced to buy futures. They're forced to buy the underlying in order to hedge their negative gamma and their negative delta exposure, and that will often help facilitate the directional activity higher in this particular case. Alternatively, we can infer that with the large put interest at the 50 strike and reasonably large at the 55 strike, that if the market traded to those levels and they failed as support, the dealers would then be required to sell futures in order to offset their negative gamma exposure and their negative delta exposure at these particular prices. So this data, again, helps provide more specific insight into levels of structural support and resistance that align with the other levels, the statistical levels and the structural levels that are provided in the dashboard. They provide extra insight and granularity in determining what levels are most significant and also understanding what could occur in the event that levels fail as support or resistance.